And take 5. Are we rolling? Oh, the camera's on. This just in! Breaking news! Our top story tonight. Most people are not millionaires, and I have the stock to quadruple, nay, 10 times your income in 1 month. What is that? 1 week! 1 week! 10 times your earnings power! No, I'm just kidding. I have a normal stock pick, and I have an answer to your question, which everybody asks me. How much should I invest? So please, I put some effort into making this video, and I do hope that you enjoy it. So my stock pick for today, as written on the board, is Honeywell International. Now, I've been invested in this company for a while, and over the last 5 years, this has been a terrific pick. Not a small part of the reason the results are so good, in my opinion, is because Donald Trump got elected president, and typically when Republicans get elected, defense and aerospace contractors, they typically do well. Republicans typically in the office typically make these types of companies do well. But the reason why I chose it as my stock pick for today is because it's having 2 spin-offs in 2018, as I wrote on the board, number 1 and number 2. So let's see. Number 1, homes product portfolio business, and number 2, transportation systems business. So if you buy 1 share of Honeywell today, according to the upper management, by the end of 2018, we're going to have 3 separate companies. Now, if it's hard for you to visualize or conceptualize this, think of a few years ago back when eBay used to own PayPal. And anytime you purchased something on eBay, you were forced to use PayPal. And they were part of the same company. PayPal was just another division of eBay. So now, anybody that used to own a share of eBay, if they didn't sell anything, now they own 1 share of eBay and 1 share of PayPal for every share of eBay they own. So it's like a stock split, but it actually split into 2 different companies. So what Honeywell is doing is they're splitting into 3 different companies. And the reason for doing this is because these 2 divisions, the home product portfolio and the transportation systems business, these are faster growing companies than the overall corporation. So Honeywell International itself is growing revenues, is growing earnings, and is growing dividends. So by itself, it is a good company to invest in. But the thought process is by spinning out these 2 other divisions into their own separate companies, this will unlock value. These companies might deserve a higher PE ratio, and investors might like to pay up for this company, kind of in the same way that investors who originally invested in eBay, part of them or some of them were investing in PayPal just because PayPal was what they really wanted to invest in. So typically when the spin-offs, that is one of the lines of thought, is that you can invest in higher growth businesses, and when they're spun off, there'll be higher growth businesses on their own. So today, also as part of my video, I would just like to do some common sense advice. Today is Sunday and the stock market's not open. So just to give general advice to people, one of the most common questions that people ask me is, how much do I invest? So I would say if you are different incomes and different net worths, you should think about this question differently. So first of all, the easiest to answer would be if you have let's say $1 million in liquid net worth, which means aside from the value of your home, you have assets minus liabilities worth at least $1 million. So that would be the easiest question. And I think most people with an income or a net worth that high, they should have the vast majority of their money invested in the stock market at all times. I'm saying like over 90%. Now, a lot of financial advisors, of which I am not, I do not give financial advice. I just tell you stuff based on my own experience and the advice that I would tell my mom. But a lot of financial advisors would say as you get older, you should have less and less invested in the stock market in case of a downturn. While this is nice conservative advice, I think that most people, when they are in their 60s, they are typically nowhere near the age when they are going to die. I know that sounds a little tragic or anything, but really, like, people are living into their 80s and 90s, and the best place to grow your money long term, and I don't want to say consistently because the stock market is up and down, but consistently decade to decade or over any 20 or 30 year period is the stock market. The stock market is just wonderful over any 20 or 30 year period. So if you have your money in index funds, that is probably the single best place that you could put your money long term. Warren Buffett said for 99% of us, or 99.9% of us, the best place to have our money is in index funds. And we will not do better than having our money in into a general index fund. So most people don't have $1 million. So let's say you only had $100,000. I would say as long as you have some money set aside, kind of like an emergency savings account. So let's say your expenses are $2,000 a month. As long as you have $10,000 or $12,000 set aside, I think you can have most, if not all, of your other money invested into the stock market, into common stocks, into index funds and mutual funds, that sort of thing. I prefer index funds because they're zero fee or very, very low fee. Typically, they're very, very low fee. I haven't found one that's zero fee, but it's close enough to zero. VOO is one that is 0.05%, which is an extremely low fee, and I think of it as a 0% fee. So let's say you only have $20,000 of net worth. So that really depends on your living situation. At this level, I think I would be taking some risks, but I would also typically invest maybe, let's say, $5,000 into index funds, a couple $1,000s into your own stocks or your own stock picks or into cryptocurrency. And I would still have that emergency fund set aside because this is, on one hand, it's not that much compared to what other people are investing. And you do want to have your living expenses in case of emergencies. But on the other hand, I think it is okay to invest $5,000 to $10,000 because this is an amount that if the stock market goes down, it is very, very easy to recoup this amount of investment just by working and just by being motivated to save more and earn more in life in general. So let's say you only have $1,000. If you only have $1,000, if this is your complete net worth, it really depends on your living situation. If you're living with your parents or you just don't have any living expenses, then fine, yeah, if you can risk the whole $1,000, yeah, stick it all in or stick $500 in. And the only way to really get started to amassing great wealth is to actually get started, is to buy something, buy an index fund, buy a couple shares of stock, and get your feet wet. The hardest part for beginners is to actually open up that account. You can open up on Robinhood, you can open up on Fidelity, E-Trade, Interactive Brokers, all kinds of different companies that you can open up your account on. But you need to get started. You need to buy your first couple of stocks. If you like investing in cryptocurrency, invest a very small amount into cryptocurrency. Invest $10 or just put something in. But if your net worth is about $1,000 or $2,000, then the best advice I can give you is to just get started and just put something in. Even if it's one share, buy one share of Honeywell. Right now it's $158, and 5 years ago it was $68. So it's went up $90 in 5 years, more than a double. So by investing in great companies like Honeywell, this will do three things. One, you will continuously collect dividends. This is money that the company pays you because you are an owner of the company. Two, you will probably experience capital appreciation, which means when you buy a stock at one price, aka for Honeywell, $158, in 5 years, you're probably going to be worth more money because the share of Honeywell is probably going to be worth more. This is not guaranteed. Past performance is no guarantee of future results, but in general, stocks go up. So there is risk, but in general, stocks go up. I don't know how else to say it. That's just true. And it is the single best place to put your money. So Honeywell is a great example of a company that will probably go up, in my opinion, and I do have my money where my mouth is. So the third thing it does for you is it gets you started. So really the important thing is if you have a very low net worth of anywhere from $0 to $20,000, a really important thing is to get started. If you really have close to $0, you can get the Robinhood app on your iPhone or on your Android phone, and you can do trades for $0. They have a $0 fee. So you can buy low-priced stocks. There's some oil companies. There's, I think, Groupon is $5. There's some other really low companies. You can buy a share of Pandora for $4. In my opinion, these companies are a little bit riskier. Usually the price is low because there are problems with the company that are either known or unknown. And I probably wouldn't usually recommend companies that are trading for under $10 a share, but I do think it is so important to get your feet wet. And if you invest a little bit and you lose a very small amount, if you lose $5 or $10, it's really not a big deal, but it just gets your feet wet and you can actually start the process of becoming wealthy, becoming worth six figures, 100,000, 200,000, 300,000, and eventually be on the road to being worth $1 million. So that's all for today. I hope I answered some questions. Please subscribe and please share. Enjoy your day.